Entering bills in QuickBooks Online is not only one of the first steps in the accounts payable process, but it is also something that allows you to have a more holistic view of how your business is actually doing. If you are not entering bills in your QuickBooks software and you're just paying them out of your bank account and recording those payments when they come through, you could be missing a critical forecasting opportunity that is available to you in QuickBooks. So let's go ahead and dive in with how we enter bills and what reports those bills impact. So you can see here, I have a sample bill from Smart Office Supplies for a whole variety of different items. And I picked a couple of different items so that I can demonstrate a few different things. First, there are some items on here that are just things that should go into office supplies, right, as an expense account. But we also have something on here. We have a commercial printer. And since that is not only an item that has a longer useful life, this is something that would probably fall into the 5 to 7 year category, but it's also a very large capital investment. So we might be treating that a little bit differently on our books, given the policies that we have in place for our business. So let's go ahead and get started with how we would enter this bill. So first, in QuickBooks, we would want to go up here to the plus create, and then we would want to select bill under vendors. This will take us to the bill screen. Now, you can always drag and drop a PDF version or an image of the bill into this screen right here, and it will autofill in QuickBooks. This is actually a relatively new feature that QuickBooks has rolled out, and it is performing pretty well, I would say. That being said, anything involving AI is definitely a trust but verify at this point. We would want to be very diligent about double checking how it is treating everything on our invoices. So for the sake of this example, I'm not going to be using the autofill feature. I'm just going to go ahead and close this. So that minimizes that on this screen, but you can see if I clicked this little button right here, that would pop that window back open and I could go ahead and add the bill. So as a general rule, if I am entering a bill, I usually have it up on the other screen, but so that I can show you what this bill looks like, I do have it here next to me. I'm going to go ahead and move myself over. We'll move me down there for now. All right, so I'm going to go ahead and start entering this bill. Now, this happens to be for a vendor that I already have in here, which is Smart Office Supplies. So it does autofill some of this information. If I wanted to, I could go ahead and add their address since that is there, but it is not required. You can also edit it right in their vendor profile. If I wanted to send them a check, I would definitely want to go ahead and put the address in there, but since I plan to pay this bill via ACH, I'm going to go ahead and leave it alone. They have extended me terms of net 30 days, so I'm going to enter that. The bill date is in fact 4/2, and that makes the due date 5/2 of 2026. Again, I'm just pulling this information from the bill. They've given me a bill number of SOS 4827, which if I had to guess would be Smart Office Supplies and then the number. All right, now here is where things get interesting because like I said, not everything on this bill is something that I would classify just to office supplies, okay? So with that in mind, I'm going to go ahead and break this out into the two categories where I would put these materials. So I purchased a commercial printer. Okay, that is a large item and that is something that is going to be useful to me over a long period of time. So I would actually classify this as a fixed asset purchase. Now, depending on how technical and granular you want to get in your reporting detail, you can create an item that is a fixed asset, that is a commercial printer, and put that there. But if you would rather just go ahead and add a line item to your fixed asset account with a little description of what it is, you can absolutely do that as well. So I'm going to start typing in fixed, and sure enough, fixed asset comes up. I could just put this into this account, again, making sure to put on this description line what it is. But I'm actually going to go ahead and add commercial printer as a fixed asset so that it shows up with a little bit more detail on my balance sheet. So I'm going to add this as a fixed asset. And then I want to tell it what the fixed asset is. So QuickBooks actually under detail type does have fixed asset copiers, okay? And since that is an exact match for what I've purchased, I'm going to go ahead and put that there, okay? So I'm going to go ahead and save this asset now. And I'm going to add in the description that it gave me, okay? So I can copy this from here and then bring it over here. Oops. I wanted to put it all on one line, not delete it. And I'm going to put the amount. Now, again, this is something where this may or may not be how you want to handle this particular type of purchase. If you have any questions about this, I highly recommend talking to your CPA, because how these items are treated ultimately comes down to tax law as well as your particular business's policies on this, basically. So for example, I've worked for companies where they have a policy that anything that they purchase that is under $1,000 is not going to be added to their balance sheet. It is just going to be put down as office supplies, okay? This would obviously be over that $1,000 mark, and so it leans more towards fixed assets, and we might want to have the detail for that. I personally in my business choose to treat things like furniture and fixtures and any large pieces of equipment that I've purchased, like something like this, as a capital purchase, and then I will depreciate it over time. Now again, tax law changes on this all the time. There is something to be said for putting it on there as a fixed asset so that it can be treated correctly each and every year instead of making any assumptions about how it should be treated. So I've put that in, and now I can enter in the office supplies that I also purchased on this particular invoice, okay? How detailed I want to be about this is really up to me at the end of the day, and it depends on how granular I want my reports to be. Since I don't have any separate items for any of these, toner, copy paper, a maintenance kit, and an office supply bundle, all of those would fall under the overall heading of office supplies to me. So I am just going to put a single line item for office supplies with all of these items on it, okay? But again, I could opt to get as detailed as I wanted to. So I could put a separate line item for each of those office supplies and then add description information. Instead, what I'm going to do is I'm actually going to add up all of these side items by using that built-in calculator in QuickBooks, okay? So I've just put 840 plus 440 plus 275 plus 185, and if I hit tab, it's going to add all of those up for me. Now, what I want to double check here before I move forward is that the total that I'm showing here matches the total that I have on my invoice. And since it does, I'm going to say, great, we can go ahead and move forward with that. Now, I could put the descriptions of each of these items in here, but what I'm actually going to do is I'm actually going to go ahead and add the PDF attachment of the bill that I have. I have this version right over here that I can drag and drop into the add attachments section here. And that is going to mean that if I have any questions about what was purchased down the road, I can simply click right here, and then that is going to pop up, and I'm going to be able to see all of the detail around this particular bill, okay? So that is perfect. That is exactly what I would want to see. So I'll go ahead and close this, and we'll go back over here. Since I am attaching it, I don't really need to put all of this description into the line item over here, okay? Now that I have added everything from the bill, I am actually going to go ahead and close this so that we can get our full screen back. And we're going to go ahead and keep moving on. So now that I have done this, now that I have entered this, I am going to go ahead and hit save and close. And now we're going to go ahead and take a few minutes to kind of explore what was hit on our reports, where this transaction flowed through to, okay? So if I go into my reports, we're going to start by going to the profit and loss, okay? And I'm going to, instead of doing this year to date, I'm going to run the profit and loss for this month. There we go. And since it is on accrual basis, I would expect to see this bill. If I ran it on cash basis, I wouldn't see anything on here just yet, because cash basis is all about when the money changes hands versus when the expense is actually incurred. Okay. So since we're looking at it on accrual basis, I see I have a line item right here for $1,740, which is exactly what I put to office supplies. Okay. Now you might notice we don't have that full amount of $5,590 that we saw on our invoice. And that is because the other portion of this, that copier that I purchased, didn't come over to my profit and loss report. Since I recorded it as a fixed asset purchase, it is actually going to be showing up on my balance sheet. So let's go ahead and hop over there and see where that is showing up. So if I go back to standard reports and then select balance sheet, and again, we want to make sure it's running through the date of the invoice, I now see that I have fixed assets and I have a commercial printer here, and there is that $3,850. Okay, so that is showing up as a fixed asset on my balance sheet. Now, what happens to a fixed asset, and how do we actually get to then declare that as an expense? Well, what will happen is when your CPA files your tax return, they will record any fixed asset purchases that occur, and those assets will be depreciated over time in accordance with tax law. Now, like I said, this changes from year to year. And currently we're seeing a period where we're able to take 100% of depreciation in the year of purchase. But since that is not always the case, it is always good to set things up as a fixed asset if you have any questions about how it should ultimately be treated for tax purposes, and to allow your CPA to handle the treatment of those assets as is appropriate for that tax year. Okay. Now, when the CPA files your tax return, and if they can take the full depreciation, you will see a line item for accumulated depreciation, and then you will see depreciation expense show up on your profit and loss. All right, so that is how this hits our profit and loss and balance sheet reports. Now let's go ahead and look at our accounts payable reports and see how this is showing up. So again, if I go back to standard reports and then go down to the section of who I owe or what I owe and run an accounts payable aging summary, I'm going to see that I owe Smart Office Supplies $5,590. And if I click on this amount, it's going to drill down deeper, and I can see that that is made up of a particular bill. But what you can also see here is that if I had multiple bills for Smart Office Supplies, I could see that there were multiple bills making up that particular amount. And conversely, if those invoices fell into different aging buckets, I could click on the total amount right over here to see all of the invoices that made up that particular number. Okay, since this is the only one that we entered, and this is the only invoice that I currently have outstanding in my books, this is all that is showing up on this report. Okay. One last thing I want to call your attention to is the difference that we would see on our profit and loss if we ran it on cash basis versus accrual basis. Okay, so again, I'm going to make it for this month. And then if I toggle right here over to cash basis, you can see there's no information on this report just yet. And that's because there haven't been any transactions recorded. Remember, cash basis is all about when cash changes hands, not when a transaction actually took place, i.e. when we received a bill from a vendor or when we sent an invoice to a customer. Okay, so cash is what has truly happened, and accrual is a little bit more nebulous. It's things that haven't necessarily been paid for yet, but it is when we have actually accrued that particular expense. Okay. So if we're looking at our accrual basis reports, we see that we have spent $1,740 on office supplies. Now, this is why accrual basis is considered to be a slightly more accurate way of recording your expenses. It shows everything that is currently owed, both to you and that you owe, versus what has been collected. Okay, so If I were looking at my reports and trying to do some forecasting for my business, and if I hadn't entered the bills that were due into my books, I wouldn't see what money I owed. I wouldn't see money on an accounts payable aging summary or detail. And so I might think that I had more cash at my disposal than I actually have at my disposal. Okay, it's important to know what you're going to owe in the next 30, 60, 90 days so that you can appropriately plan for the cash that is entering your business. Thank you so much for watching. I'm Holly from Accrual Mistress Bookkeeping and Consulting. If you found this helpful, please do like and subscribe. And I will be doing a video coming up here in the next few days about how to actually record a payment against a bill that you have received from a vendor. Thank you so much and have a lovely day.